investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Friday the 13th. And amazing. Yesterday, a couple of days, actually for quite a while, Larry Pesavento, who's doing his live trading workshop right now, has been talking about the 12th of June as a change of trend day. Well, that was quite a turn. Congratulations. I'm not sure that the Israelis listen to Larry to use that as their day to attack Iran, but we'll see what happens. Okay, so I just want to do this before we show. There's a comment in the den. Anyone who uses good till canceled orders, this type of morning, it's always good to check your open orders and make sure you still want them. Very good point, Dan. In the den, absolutely. That's that kind of information is so pertinent to this kind of a market. Thank you for that. So a couple of questions have come in, but what I want you to do, because last night when I did my video, my overview video, hour and 20 minutes, I think it was, I did not realize until I had actually posted it, and I got some messages saying, there's a problem, that it had been, I had done it without canceling everything else. So the TFNN rebroadcast was going on in the background, so you really couldn't hear anything because there were two conversations going on at once. I tried to fix it because I needed to find out where the source of the problem was. I just didn't want to take that time. So I said what I'll do is, during my show today, I will go through a bunch of our positions and I'll talk about where the support levels are. And I've been doing that for the last week. I've been saying, hey, upside is limited. And I want to just do this real quickly. Upside is limited. And I went through a number of reasons, both in the chart wave methodology with the troughs and peaks, but most importantly, the chart wave automotive support and resistance levels. So here is, let me just do this real quickly. I've been doing it once or twice this week already. I'll do it again. Look, for the first time, it wasn't there until about 2 days ago. You suddenly had automated resistance levels right there. Look what happened to the automated resistance. Look what happened with the support, how it held and then broke, held and then broke, held and then broke, held and then rallied sharply and then broke. And look, almost perfectly at the low, you had the same thing. So it held the support. And this is resistance. Look at the S&P. So the Dow is down 615 at 42,350. The S&P right now is trading down 53 at 59.92. Look at all those resistance levels. It has supported 57.86. I don't do that. I like to go step by step. And I'd say 59, the whole 59.40s to 30 should be really strong test of support if there is going to be a pullback from here. QQQ, look at that, resistance at 542.46, and look what happened when it was 529. You pulled back for a few days. Look what happened right here. The high was 536.78. And 542 was the resistance. So you're just pulling back a little bit. But look, that green 9-period moving average in each case is still really strong. To get that to go pink, negative, remember, the 9-period moving average turns green when it goes over the 14, and it goes pink when it's under. To get it to, you'd have to see the QQQ trading at about 520. And you're at 528 right now, 520. You're at 520. Did I say 520? No, I think it'll be much lower. It'll be 518 to go pink. All right, next thing we're looking at is the IWM. The Russell 2000 small caps. Look at all the resistance. Plus, it's sitting on the 200-period moving average that has been a repellent zone for so long. It was a support, then it became a resistance. So we're watching this very closely at 209.82, down 2.96%. Actually, this is very interesting because that usually acts as a magnet line. Let's go to the SMHs. The semiconductors are down 4.82 at 258.25. There's 265.60 was the resistance. What was the high? 250. It took it out, 262.68, 264.91. It went just under that, and now it's pulling back a little bit. It's just a work in progress so far. All right, now what I want to do is to go to the XLK. That's the S&P tech sector. Finally, you didn't have anything the other day. You got 241.38. It went a tad above that. It went to 241. No, it didn't go above. It went to 241. 13, and now you're just starting to pull back a little bit. Let's look at gold. Gold is trading up 51 at 34.53. You got a slew of resistance levels, but that 9-period moving average is strong. The MACD is good. The stochastic's quite weak. It's only at 75%. No, 62%. Sorry, have to go with the red line. I should just change that. Let me just see. Edit, alert, remove, disable, format. So I just want to cancel that out. So that's the green, display, update indicator, display, okay, style, color. There we go. So that's that one there. Yeah, I'm not going to do it now in the middle of a show while everything's working just great. So that says that the price is going. Let me just show you the real thing. This is now gold with my daily, weekly, monthly charts. Here's gold GC continuous contract, broke the resistance level. That was really important, and it is above the down inside track, Chapman wave inside track repellent zone. Now it's become a propellant zone. So if it comes back at any point in the next week, if gold closes under 33.80, right down there, that's going to be a problem and say, sideways, just digesting huge gains. But right now, it is the place to be. It is the insurance policy, geopolitical, economic. I always talk about gold. That's the reason why we've kept it for so long, our physical gold, PHYS. So I said, because my video yesterday was unacceptable. You couldn't really hear it. It was unacceptable. I said I will do a lot of this in my show today. I just didn't have a chance to read you. I couldn't figure out what was wrong. So this is a brand new leg F in the physical gold F, but at the same time, this could have recycled. Could be an F/A, but I don't want to go there. But in the weekly chart has gone to an E. That's really important. And the monthly chart has just gone to an F. But there is an instant restart here within the 3 bars. If the price goes above peak D, think alternate count. So this is an F, maybe /B. Oh, that would be amazing. Spot physical gold. Right, okay. So as it stands right now, gold is doing extremely well. Silver is not participating as well. Silver is up, now it's down 10 cents at 36.18. It's just making this pattern now. This is a pattern that I monitor very closely. It's the falling axe formation where you make lower highs and much lower lows, and then all of a sudden you find some support. Can it break above? The 2 patterns here. One is where it's very short term, and the other is when it goes on for a long period of time. So we'll see, because if silver can close above today's high of 36.77, it'll immediately tackle the high of the 9th, which is at 37.03. I'll be right back. Dow's down 623. Basil Chapman, Tiger Technicians Hour.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So let me just get to this question immediately. CVX is a time to add. So if you have it as a core position, I'm going to say at 145 right now with 148.64 is the 200-period exponential moving average in leg C, the brand new leg C. The last buy went to the D and then it pulled back. I'm just going to suggest that, yes, I would do that. I would only treat it as a trade. I would not treat it like this is a major position, because if you look at XOM and CVX, which is Chevron core, ExxonMobil has a little bit, let me just update this, slightly better chart in the monthly, and the daily is looking a little bit better, but you asked me about CVX, so Yes. So you asked me about CVX, and I'm just going to say, in this trading range, there are always things that happen with crude oil that impact ExxonMobil positively and Chevron positively, but they haven't been able to last for long over the last year and a half, 2 years. What happens, it's really a sideways move. So think of this as a sideways move, and I would start just a small position right now. I would add to that position if it's able to close above today's high, but it has to do, time is of the essence. It has to either be today, it has to reverse back up to 147.61, 147.60 is the high, it's at 145.73, or it has to be Monday. And I would actually have a stop on this position. I would say a 2-point stop if you're getting in here, 143.84 is the stop. I don't think that should be taken out. If it's done immediately, it says, oops, crude oil is going to pull back very sharply, very quickly. I think crude oil is moving higher for a reason, and that's what I'm looking at. So let me just go through. So I want to go Bitcoin, BTC. I'd say Bitcoin, I think, is in a trading range. We're all long. We've taken little bits off. I said the 112,600 area of the December, the week of the 10th, sharply down to 72,000 and up to 113. That's like a double top. Doesn't mean to say, oh, now you have to really tank. No, I think it's going to be chopping around. I think it has a place, Bitcoin, in this environment, but I don't think it has a place to go above 113 at this point, 113,000. So I think it's stuck, and I would not be surprised if it actually tests the 98,000 to 95,000 level over the next week and a half, and that might be it. But right now, it's digesting huge gains, and that's really the way I'm looking at it. What am I forgetting? Let me just go to bonds right now. The bonds are down 25, 30 seconds. So the TBT, that's the yields. Yields are just popping up a little bit. Oh, that's where it did. That wasn't, I typed that incorrectly. Let me get rid of that. So it's got a trough D right now. So yeah, I just think yields are stuck in a range. And we spoke about that yesterday, and I said Toll Brothers is a good example, but I don't think Toll Brothers is going to go to that higher move. It's trading down $1.85 at 108.70. It's going to be kind of a test, a Rorschach test for the yields and what happens to the building area. Look, high grade. So HGX is the, there we go. This is the Philadelphia Housing Sector Index, down 8 at 629, made a peak D, and it's kind of stuck. So I just think that this is telling us that yields are still an issue, but not the issue. It's just part of the whole complex, and I'd like to see yields come down to get off the radar. Okay, so I think I've covered, high-grade copper trading down, 0.06 at 4.77, just not going anywhere. All right, now I can do what I want to do, which is to repeat. I won't do it exactly. I don't have time at all. But I'm going to quickly go through what I was looking at. And mostly my video last night was telling you upside's limited, and these are the areas of support that we're going to be following. So for once, we had luck work with us instead of getting into a position and then getting stopped out by a fraction for a very small loss, and then whoosh, it takes off. We were lucky because we got into this position minutes before my updated email saying, don't go along the SDOW because the GE BA might be a one-off, and the market keeps coming back. But thank goodness that came out after we had got it, because we were taken out of our 3 times short SPXS. So we're back now. We're back to the short side of the S&P and the Dow, and we'll see what happens. Just treating it as a trade, because you can see even today that 9-period moving average is still way over the 40, and the day is young. That's all I can say. So the levels to watch, the 200-period moving average on the Dow is at 41,753. A close below that says you're going to probably test the left side low of the right there. That was that low at trough A, single leg down, goes to a higher high. Remember, my rule of thumb with the rectangle formation is that if it goes sharply lower and then immediately goes with stair-step way going to a peak A and a B, it could even go to a D just above, or just below the previous high, in this case 42,842. We went to 43,115, and then you've got to be careful. And if you take out halfway into the rectangle formation, remember I've done webinars on the large and the narrow rectangle formation, so that would be 42,300. A close below that says, oops, you're going to retest that low. So I'm looking at this as vulnerability more than anything else, right? It doesn't tell you yet how deep it can go. Why? Because once that 9-period moving average, at some point, if it does go negative, go pink under the 14, the aperture, you see how, look what happened when it went above right there, when it turned L, meaning that particular indicator went positive. Look, the width of the aperture between the 9 and the 14 really explains how far and how high you can go. So I'm waiting for it to come down. It hasn't done that yet. Now the don't have to do the, yes, I have to do the S&P because we are short. So SPX, what we're looking at is down 61 at 59.83. 9-period moving average, we've under it. The 14-period moving average is at 59.64. To get that green to turn pink, I would say 59.81, 59.60s. You'd have to see that, and then you might get that 9 to go negative, but that's what I'd be looking at. So I also wanted to do so we are long AIQ. We took a little bit off at the opening, before the opening today. We've had this for a long time, from way back. There's the monthly chart way back in 2024, and then we took quite a bit off, and then we added to it recently, and that add to was at so the AIQ. We've got an initial long from the 28, 29 area, and then we took quite a bit off, and then we've added back at 36. So 36 to the high that was made at 42, just under the target area of 42.49. The target was 42.78. I'd say that's pretty darn good. Left side, right side price time match. Look at that. This is the Global X Artificial Intelligence ETF. That I couldn't use the plumb line there, the low, to say the number of bars on the left to the number of bars on the right should be equal, because it was using time on the right side. So I made it to this particular doji type candle right there, and that said 3 days ago the target should have been 42.78. It went to 42. What did I say? 40 something. 42.49, and now it's pulling back, just pulling back a little bit, but we did take some off the trading position. I'll do many more as soon as we get back, and this is the Tiger Technicians Hour, and we're looking at the Dow down 657, the S&P's down 63.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi folks, we're back. Basil Chapman, Technical Hour. Dow's down 702, S&P's down 68. So I typed this in. Here's the 5-minute E-mini chart. I typed in single leg A. I put Eiffel Tower pattern, A pattern. What is the A pattern? It's straight up, straight down. Looks like an Eiffel Tower. Well, look, there it is, Eiffel Tower. Straight up, straight down. And what did we do? We took out the 200-period moving average. Now the 59.87 200-period moving average in the 5-minute chart is the resistance. This is a peak F in the 10-minute chart. Think of this as a monthly 10-minute chart. 5-minute is the weekly, and the 1-minute chart is already giving you a great sell signal with the peak C1, C2 over there. It was even. Listen, look at this, all the way. That was that big spiral, right? But in fact, where was it? I don't want to go through it. It's just a waste of time because I like to look at the future, not the past. Right. So as it stands right now, the selling pressure did come in. And what I was anticipating, that if there was any buying, it would be because those who missed out shorting wanted the market to move higher so that they get short. And I think that's kind of what we see. Now, a couple of questions. So I'm going to do questions as I get to, as I see in the den. So RH, we don't have any position in RH. It used to be Restoration Hardware. Oh, not the 1-minute chart. Yes, M25. Let's go back again. Just because it was a statement in the den. I don't know how this happens, and I actually kind of understand it. Restoration Hardware, RH is the symbol, screams up to a peak D. There was a phantom peak B right there, but that went to a D on August the 21st. It hit 744.56. Sounds almost like the Dow's down 700 something. Oh, yeah. So this is, and then it comes tumbling down. And what was the low just a few weeks ago? 123.03. So it had a big spike. Must have been earnings news. But for anyone who's been out to restaurants, wow, you can't, certainly in the Northeast, and actually many places I've been. I was in California last month, and I was in Sydney, Australia, just all around the world. It seems to me that somehow there's discretionary income because restaurants and prices at restaurants are out of sight, and they are full. Not everywhere, obviously, but I'm saying I'm surprised at the number of places that you have to struggle to get in. And I'm not a fancy eater or anything. I just do this more as entertainment to be with people, to go out with people. So this is Restoration Hardware. There's still some discretionary income to pay for those fancy locks and door handles and things, but less and less. And therefore, this must have been a big spike to the upside. But the reality is that prices everywhere for almost everything are really still very high, and in many cases going higher. So Restoration Hardware, off the high of the day of 221, is now at 199. So it's pulling back quite a bit. Another question was Microsoft. Yeah, so we are along Microsoft from 338, taking little bits off, and then we took quite a bit off. And we've got the core position, but I've been watching it goes to 480.42 yesterday, an all-time high. Let me just double-check that, 480.42. And it's pulling back just a little bit. It's down 3 at 475.85. So far, nothing to see here. Would you even believe today that there was a major conflagration last night, geopolitically? And economically, we're looking at Microsoft, which has been one of the leaders in the tech sector, having made an all-time high in leg F in the monthly chart, only a leg B in the weekly chart, doing great. So the question came in a little earlier. I'm going to cover two questions. One was UVXY. So this is the title of this is called, I used to have it typed in somewhere, ProShares Ultra Short Volatility VIX Index. This is the short term. So it is up 1.84 at 22.58. And then an analysis was done in the long term. I have found that that it's so hard to do that. I rather would go to the core, like the VIX index. And what I've been talking about for some time now is that the VIX index going into the 2180 to 2240 area and holding with the Dow sharply triple digit down and the S&P over 58 points lower. And it has to do that 2 days in a row, maybe even 3 days, for you to start to get that bear market. We aren't even today. It's not a bear market yet. It's just one big turn down, and not everywhere, as I showed you with Microsoft. So all I can say is that I'd rather use the VIX index for these big spikes. Look, it's almost a symmetry here where you can go from. Let me show you something. And I said that I'm anticipating, and this was in May, I said I'm anticipating in early June that the VIX actually does, for whatever reason, does have a spike, but it needs to get to today's high is 22, round number. It needs to close between 2180 and 2240, and the next day be even more. But look at this. You go from this high right here to that high right there. Doesn't work, does it? Mm-hmm. And then you take that and you go from there to there, goes to almost there, and then there to there. So there's a bumpy sequence. But what's really important about it is it tells you that the 200-period moving average, which I said is the one thing that you've got to follow, because if it starts to hold above the 200-period moving average in the VIX index of 20.01, what it was 1998, I think it was, when we were looking at it before, that's going to be very important. So keep in mind that all the peripherals, all the aspects that I consider very important in terms of having a down phase. I just have to do this. This is called the DNI, Chapman Wave DNI, Dark News Index, using the Dow Daily Chart. I drew this in saying I believe we made an internal high, and I'm anticipating that we make a residual high. Think earthquake and aftershock. DNI, earthquake, aftershock, earthquake. So this is internal high, residual high, internal high, residual. Sometimes the residual high is lower or the same or higher, but it is the residual high. So in this particular instance, what we're looking at is we made a residual low on the 7th of April. We considered that was a major turning point, and we've been buying ever since then. But at the same time, now we're starting to look at the short side. Why? Because I think, and I'll put this in gray, I'll put that in gray, thinking, well, let's just see if it works out, because it's not quite the usual, but it uses my particular criteria. So is this a residual? I'll put it with a question mark because it's still a question mark. Is that a residual high? It will be if the Dow starts to close under 42,800. Then I'm going to say absolutely. But so far, it's a work in progress. I'll be right back. Basil Chapman, Technicians Hour. Still got a bunch of questions to answer.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Had a question. Could I look at SharpLink Gaming, SPET, SBET? Is the symbol down? Whoa! No, is that right? 10.96. No, something's wrong. Oh, there's the price. Oh, I didn't see the price on the 200-period moving average, down 21 at 10.96. So I was about to show you. You see this chart right in the middle? It's a daily, weekly, monthly. You see this weekly chart? I was going to say to you, hey, Peaky, didn't you just see this chart right here with the Eiffel Tower? So that's the Eiffel Tower right there. So be really careful with that. So what did we do? I said the resistance will be the 200-period moving average of 59.96, and we just tagged it. The buying that's coming in here is really quite remarkable. And all I can say is we've seen markets that if you do technical analysis, I think it's been a lot better than fundamental. I bumped into a tennis the other day. Bumped into a guy that I've seen for years and years and years. We always just say hi and all that. We don't really chat. And I always thought he was an architect. So I said to him, so how's the architecture world? Architecture? He says, I don't know architecture. I'm an economist. Yeah, well, I was. I just retired. Oh, he's an economist. So immediately he starts talking about how he shakes his head about Trump and tariffs. And every single economist that I know and that I've spoken to, that I've listened to, no matter who, there's someone I spoke to just about 5-6 months ago, no, maybe 4 months ago, who works with Larry Summers. He's a serious economist. And he was shaking his head about tariffs. I said, no, it's just a negotiation thing. Market seems to not be taking it in because I'm just going by the market. So it's interesting. So SBET, let me just say that I would not touch this right now. Yes, you will have an opportunity. This is the biggest island reversal that you can get. I mean, I've seen worse than this. There was one that took a year or so, but it was an island reversal, meaning that all the action is away from the body of the trading. No, I just stay away. Next thing, okay. So, the economists are thinking one thing, but even how does the market hold up? Only down 600. It should be down 1,000. The day is young. But I'm just saying that buying keeps coming in. The way I'm looking at it, for instance, we have Bank of America. Bank of America made a peak D. in this rectangle formation. Remember, rectangle formation, you come down sharply, then you run, you make step, move up. You can go to a peak A, a B, a C, and even a D, just under, right on, or just above the previous high. And then you've got to be careful not to take out the halfway marker. Well, it's at 43.89. If Bank of America closes under 43.30, well, let's call it 43. 43, wow, I think it retests that left side low. So we've been long. We've taken a little bit off. It's the longest we've actually held Bank of America. Usually we've held it every year or so, and we hold it for a while, and we get out at the top, and then we start to whittle away until we've got nothing left. So I don't know whether or not we're going to whittle away on this, but that's it. CDE, core mining. This is the silver stock, doing very nicely. It went to the left side high that I was looking at, right here. So I'm doing this as if it was my video overview that didn't come out properly yesterday. So I'm just doing it now. I said to subscribers, I'll do it during the show. I won't get to everything. So look at this beautiful symmetry, and it broke above it. So it's broken above the inside track repellent zone. But it's a monthly chart. If at any point core mining goes under $8, it's kind of done for a while. But right now it's holding very well. It's not great. I mean, it's done great. I'm just saying the last 6 sessions, it's done very much nothing. So it's filled some of the gap, but it's we'll see. If on the very short term, 880 is the key support. Let's go to, and I'll skip some that we haven't had any position in for a long time other than our core longs. So let me just go to the next thing, which will be General Electric. So we're in General Electric in the 198 area. I don't know where I typed that. I hope I haven't made a mistake there. GE. And I said, just be real careful. We've taken nice gains from it. And 257 was the high, 257.47. And now it's down 572, 234. I would not be buying General Electric yet. Is this going to be an Eiffel Tower in the weekly chart? No, I don't think so. I think General Electric could get down to the 222, 218 area. That 218 is the weekly 14-period exponential moving average. It's had a spectacular move. But it was the reason why we started taking something off, because it was looking to me like it was getting tired and it needed a breather. And the 9-period moving average still hasn't flipped negative. When it does, you can add some points to the downside. So that makes the whole 222 area really important. But I wouldn't be surprised if it does touch 218. Limited upside. That's what I'm really looking at. Next one that we're looking at is Hood. Robinhood, we've got in the 16s. Had nice trading positions. We also, this is one where we had bad luck, where we got in right here, wherever it was. Yeah, in the 48 area, right here. And then it just took us out and then it started to move higher. So it's gone to 77.80. It's only down 88 cents at 72.98. What's going on with this? It's so amazingly strong. But I do believe that if Robinhood closes under 6, it's at 72.87. Any day next week, if it closes under 68, the whole area of the 60s is going to be a target. Right now, it's holding very well. Next thing, IBIT. This is the iShares. So the Bitcoin is down, down 2,206. I think there's a dreaded H pattern here. I don't want to show it. I'll show it. This is the H pattern. Come down sharply from a peak D, E, or F, like that. And then you arch over, fade at a peak A or B, take out the left side low, watch out below. And that's it. Here we are. So if it takes out the low of 100,000, I have a target for of the 97 to 95 area. And if it gets there, you can even go down to 91. But one step at a time. It hasn't even taken out this left side low of 100,815. So that's the left side low of a week ago. But look at this quadruple top, 112,635. Pulls back, goes back up to 113, and now I think you've got a double top. Wow, look at Goldman Sachs. Remember, I spoke about this the other day. So Goldman has 620.79 as a high back in May, pulls back, and then goes to 621.38 with the 610 round number open. on the 6th, and now it's pulling back just a little bit. But I'm saying there are signs of double tops or round numbers. Look at NVIDIA. NVIDIA had 145 double top, and yesterday the high was 145.00, and now it's pulling back just a little bit, down 3 at 141. So I'm watching this and saying, I don't have any serious sell signals. So the question is, where do I go from a sell signal? The sell signal comes in when the price for 2 or 3 sessions closes under the 14-period moving average. Then I usually put in a down arrow. The sell mode is when the 9-period moving average actually closes below the 14. So that, I just wanted to clarify. I had a question about that. That's usually what I do. And I'll be back in a moment. The Dow is down 679, S&P's down 59. Basil Chapman, Tiger Technicians Hour.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
I'm sorry, I misread that. I thought you wanted to know the sell signal to sell mode. This buy signal is, look, here's GE. It makes a low at 159.46 on the 7th of April. There's this ictus in the on-balance volume. That was a clue to me. It has a strong leg A, pulls back. That's another A underneath the previous A, and then it overlaps and goes to B. And as that 9-period moving average crossed positive, the MACD was, you see the expansion between the moving averages in the MACD, and the stochastic ran sharply. That's almost like a Chapman wave squash. and then the on-balance volume keeps going. So I went from a buy signal, and then as soon as I said buy signal, we went long at 198.90. We are still long GE, expecting some kind of a thing. So buy mode, that confirmed the buy mode, and certainly once you broke 214.31, the high that was in May. So with that said, I've done a bunch of things. I don't think I finished quite the ones that I did that. Yeah, so Microsoft, as I said, I did Microsoft. We're still long Microsoft, but now it's digesting gains, but it still looks fantastic. I mean, there's buying coming in here. So with that said, we've done a lot of the stuff that I wanted to do that I didn't, that I need to follow up. So we are short the Dow, we are short the S&P, but in each case, we've got fairly tight stops because you can see that buying comes in. But I do believe that the shorts that we got now, I think they will hold because we got them at a good area. That's the way I'm thinking right now. And it's not that I'm a major bear or anything like that. I think we needed a digestive phase, and we're getting that. So that's what I'm thinking. So I'll see you on Monday. I'm hoping all of my stuff works. I'll be out of the office. Hopefully my laptop, I don't get the double thing going on at the same time that I'm talking, whatever it is. Otherwise, I'll just see you on Monday. I hope to do all my shows at 10, but I might have to do one or two, maybe at 8 to be repeated at 10 o'clock. But so far, everything looks on track, and my newsletter will be going out as usual. So have a wonderful weekend, and just stay tuned. The Steve Rhodes show was recorded earlier on, and great